Two of the biggest tech ETFs are going head to head in today's video. We're going to be looking at the QQQ and the XLK. Now, both of them are promising big returns from tech, but which one should you be investing in? And at the end of this, we're going to do a side-by-side comparison so you can see exactly which one it is. Hey everyone, welcome back to the channel. If you're serious about growing that portfolio with tech, you probably have heard of the invest code QQQ. That is something that I actually have covered, or the State Street XLK. Today, we're going to break them down, looking at the differences, looking at how they're similar, and which one is going to be fitting your goals. So if you enjoy smart investing content like this, definitely hit the like button and subscribe to the channel. So what exactly are these? First, we're going to be looking at the QQQ. Now, this one tracks the Nasdaq-100. Now, a lot of people that are not familiar with the Nasdaq-100, it is made up of tech companies, but the big difference is it is not entirely tech companies. They are non-financial companies that it has. Very heavy on tech when you start looking at that Nasdaq 100, but it also includes consumer discretionary spending. It includes healthcare, and it covers communication. There's a few companies in here that you might think are tech, but they might actually be teed up as communication companies, or even some of those discretionary companies that we see. Now, within this one, top holdings, of course, we have Applesoft, we have Microsoft, Nvidia, Amazon, Meta, Google, a couple of the mega huge names that you see. And when you think of an ETF like this, it is really a big driving factor when it comes to growth within that tech sector. Then we get into the XLK. This tracks the technology select sector of the S&P 500. So a little bit of a different sector that they're tracking, but a lot of the companies do have a pretty decent overlap. But this ETF specifically focuses purely on technology, which again, we'll look at in just a minute. But looking in the top holdings, Nvidia, Applesoft, and Microsoft absolutely dominate. The big thing with this is it does exclude a couple of non-tech stocks, such as Amazon and Meta are not included. So again, kind of an interesting development or interesting holding. When you think of those companies, again, a lot of people think tech companies, but they are actually not. So let's talk about returns. Which has yielded the best over the last 10 years? Thinking of the QQQ, it has been about 18 to 20% annualized over the past 10 years. When we start looking at the XLK, 17 to 19%. So they are very close, almost very neck and neck with those ETFs. Very strong performers. The QQQ has slightly outperformed over the long run due to the broader exposure in the high growth non-tech names like, again, Meta and Amazon. But you have to note there is a risk factor when it comes to the QQQ, slightly more volatile because it does include non-tech growth stocks. And again, knowing the portfolios is going to make a big difference. Expense ratios, costs always make a big difference. When you start looking at the QQQ, it is a 0.20, XLK expense ratio 0.9, which means that every 10,000 you have invested in that QQQ, it's going to run you just 20 bucks. If you're looking at the XLK, it is $9, but either of the ETFs, honestly, with expense ratios this low, doesn't really make a big difference when you start looking at the returns that they're gaining year over year. And then, of course, when you start looking at the cost of financial advisors and thinking of, the 1%, the 1.5% that you might have, this is exponentially cheaper than you're going to see with those mutual funds, or you're going to see with those investment advisor fees overall. Now, when we start looking at sectors in diversification, this is the point where I do want to hop over and show you exactly what we're kind of looking at when it comes to the breakdown of these, because there is a really big difference between these and exactly how they do and how they are really held and what they do hold. So let's go ahead and hop over and take a look at this. So here we do have the QQQ and the XLK. Again, this side-by-side comparison really does make a big difference. Now you can see right here, the price definitely a little bit cheaper over on the XLK side, and the issuer is State Street versus Invesco. And looking at the holdings, the QQQ holds 101 companies. We know that it is tracking that Nasdaq 100, and the XLK has that S&P technology select sector. So with the XLK, it is a lot heavier of a concentration into tech, which is what I want to look at. So looking at the performance, you can see they are almost neck and neck the entire place when you start looking at the NAV returns that we have here. And even looking overall in the XLK, when you look at where it is right now, The 1 month, the 3 month, and year to date, it is exceptional when it comes to that technology sector. 1 year a little bit behind, but then the 3 years a little bit over, and the 5 years. So that technology sector, and being a little bit more specific, is outperforming the QQQ when we start looking at that 5 year time frame. Then we start getting into the cost. Like I said, both of them are very cheap, not really too worried about the cost overall with this. The expense ratios, again, incredibly low. If you're under, especially under 0.5%, it really doesn't make that big of a difference when you start looking at numbers. And then of course the holdings, like I said, there's 31 more holdings in that QQQ, but this is where it kind of changes. When we start looking at the top 10 holdings in here, this is where a lot of the concentration does come in. The Invesco has almost 10% in NVIDIA, while the XLK, again being focused in that technology sector, is 15% into NVIDIA. So when you think of a company that has had a lot of runway in the last 5 to 10 years, NVIDIA has absolutely been crushing it. But then you look at the overlap with the Microsoft and with the Apple, again, just holding more of a bigger concentration within that technology sector. But then you see they get into Amazon, which does not exist because Amazon is not a technology company. Then you look at Broadcom, you even look at, Oracle, Palantir that's in here, Meta again kind of excluded, Netflix again kind of excluded because they are not technically they're communication or consumer discretionary. There's a lot of different buckets that they do sit in, and they are not technology companies. Tesla is not a technology company, which is the reason why you're not seeing them in any percentage over on the right side. And that is where it really does make a big difference, is the focus of what you do have in here. And even the sector itself, you can see with the QQQ right here, they do have a really big breakdown of all of these sectors. And you can see the percentages: retail, trade, we have healthcare, we have consumer services, consumer non-durable. Then you look over here with the XLK, it is 100% concentrated in technology services and electronic technology, which again is the really, really big focus. 53% of this entire ETF is focused on that electronic technology, while the technology services, so thinking of like an NVIDIA, is another 43% to make 100% of this ETF. Really does make a big difference if you're looking to really focus on a lot more of the technology sector in the upcoming years, especially when you start thinking of artificial intelligence, when we start thinking of bigger picture with, the quantum computing, when you start looking at cloud computing and the utilization of everything. It seems like overall we are going to see a much, much larger push when it comes to the technology sector than we're going to see with the QQQ. So overall, guys, when you start looking at both of these, the comparison, you can kind of see the holding weights. XLK does have more of the concentration in those three big names: the NVIDIA, the Apple, and the Microsoft. QQQ spreads a little bit more of its weight, more of the percentages, which means that if you have a company like Apple, Microsoft, or NVIDIA, that does take a dip because it is, maybe tariffs are out there, maybe news is not meeting expectation. They are both very top heavy with very similar stocks. And even when you look at the dividend yield, the XLK just edges it out by about a 0.1%. So not really a big difference in there. And with them being ETFs, they are both very tax efficient. QQQ does have a higher turnover rate, but again, because it doesn't have the passive, really the low income that we see, or the low turnover rate of the XLK that we traditionally see, QQQ does and could have a couple more taxable events. So what should you think and what should you look out to buy? When we start breaking that QQQ, it is a much broader index ETF that reaches beyond tech. If you're looking for long-term total return in there, and of course a little more volatility, like we were saying with the QQQ, there is a little bit more volatility within that portfolio itself. So then you start looking at the XLK, that is pure tech. Little bit of a less volatility, but it is pure tech. If you think that NVIDIA, Apple, and Microsoft will continue to be those market leaders going into AI, it is a little slightly cheaper, a little bit more of tax efficient. But my personal take, when I start looking at this portfolio and looking at the concentration, if I had to put one single fund out of here, I'd probably lean a little more towards the QQQ, just because of a little bit more exposure to some more companies, including Meta, Amazon, even Netflix. But if you're looking to go right into that really niche, dedicated tech sector core, the XLK is going to be strong. So what I've actually done with my portfolio, even if you own both, having a little bit more of a tech side, maybe a couple percentage in there, and still having that QQQ as kind of the broader growth with a little bit more of a riskier option. That's exactly why I did go in here and do both. I have roughly 30% in that QQQ. I have another 15% in that XLK, meaning that I do have a little bit more exposure to the tech side with both of them, but still with a 20+ year runway to retirement, it makes a big difference. So what do you guys think, the QQQ or the XLK? There's really no wrong answer when it looks to these ETFs. It is about your portfolio, what fits best, and what is going to work with it. Let me know in the comments which one you do prefer if you are investing in any of them and why, or if you have any alternatives, definitely put them down there as well. And if you got value from the breakdown, definitely hit that like button, subscribe to the channel, share it with someone who is investing in ETFs. And until the next time, keep smart investing.